Let's get to Rick Santelli in Chicago, a very special guest today, and we definitely mean that, right, Rick?
Oh, absolutely. First of all, before I ask our great esteemed guest, Richard Fisher, president of the Dallas Fed, a question, I would just like to do a quick primer here. You know, when it comes to some of the observations that he has made over the years regarding the Fed and their strategy, he always prefaces it that it's his opinion. The intent of the Fed is to make the country better. But he is a great American for speaking his mind. And to that end, welcome, Mr. Fisher.
It's quite a build-up, Rick. Thank you. Undeserved, but I'll take it.
No, you definitely do deserve it. All right. On the current state of the economy, with regard to how many of these programs have fared regarding the Fed, I'd like to read a quote from a speech you gave last fall at the Harvard Club of New York City. On the screen, please. Nobody on the committee, nor on our staffs at the Board of Governors and the 12 banks really knows what is holding back the economy. Mr. Fisher, expand on that. If they're not sure what's holding back the economy, then why are we doing all of these rather extraordinary programs and measures?
Well, that's a good question. You know, Rick, we all know monetary policy has been extremely accommodative. We've driven rates to nil. We've moved way out in the yield curve. Interest rates are at an all-time low in the history of the American Republic. And yet we weren't seeing the transmission through to job creation, which is part of the dual mandate the Federal Reserve has. Inflation is not an issue. It's neither destructive in terms of deflating. We're running a little bit less than 2%. I don't think you can say that inflation is doing any damage to the economy. Question, why aren't we getting job creation? I think we do know the answer, and I think we as a committee referred to it in a single sentence a little more forcefully in the last statement, which is fiscal policy. You cannot make decisions under conditions of total uncertainty. We have a massive fog here. Our businesses are well structured from a financial standpoint. Stock prices are high. Leverage has been reconstructed. Interest rates are all-time low. Our companies are rich in cash. There's a lot of cash sitting on the sidelines. Question, why isn't it going into the economy? Answer, I think, my opinion, as you said earlier, is pretty clear, but I think it's clear to everybody now. We don't know what taxes are going to be. We don't know what the spending patterns are going to be. We don't know what the regulatory overload is going to be. We don't know what the cost of health care is going to be. So the fault lies with the fiscal authorities, and until they get their act together, give us some certainty, I don't think you're going to see the kind of growth we would like to see. We are doing better than all the rest. We're the best-looking horse in the glue factory, but we could do better still. We have great potential as a country, and it's not being realized because the politicians are holding us back.
All right, the most prevalent question I'm asked on this trading floor is about the exit. And in that same speech in the fall, here's what you said regarding the exit. Put it on the screen, please. No central bank anywhere on the planet has the experience of successfully navigating a return home from the place in which we now find ourselves. Mr. Fisher, I've thought that a million times, said it on the air 1,000 times. What do you think is going to happen? Is it going to be a voluntary exit that they will try to craft? Is it going to be a forced exit? Give me your thoughts.
Well, first of all, there somewhere have to be practicable limits as to how far we can build our balance sheet, Rick. We're moving in the direction of having a $4 trillion balance sheet. So we know we can't go on forever. There is no QE infinity. This has been an effort to juice the economy, and it has done its work. But the question are, what are the limits? So we do know theoretically how we can exit. There are several tools we can use. Those have been well articulated by the chairman and individual members of the committee like me, et cetera. The real question is how you get it done. Let me give you an example. In terms of a flow basis, we're getting close to buying up to 90%, maybe a little more than 90% of new gross mortgage-backed security issuance. We know from our experience here in Texas, from the Hunt brothers, for example, it's easy to buy things, but when you go to sell, how are you going to handle it? Do we sit on them? Do we slow down and taper the rate of accumulation of them, which was hinted in the last statement, which had a sentence that said, from our most recent meeting, we could increase or decrease the pace at which we buy, depending on conditions in the labor markets and an inflationary front. So I think before we talk about an exit, the question is, do we continue the patterns of purchase of $85 billion a month that we're currently undergoing? And I think that would be
Real
the next
quickly,
step.
Mr. Fisher, let me stop you right there. In your opinion, I believe that it's going to be involuntary, but if it is voluntary and we see a taper, do you think the taper would be more in tune with tapering purchases of the mortgage securities or the Treasury securities?
My own personal preference, and I can only speak for myself, would be in the mortgage-backed securities. We've had a rebound in housing. Rick, just for the record, I did support the first tranche of those mortgage-backed securities purchases. I did not support the most recent tranche. I think it's done its job. I think we're at risk of overkill. And again, we're accumulating so much. The question is, what do we do with it? You also build a bureaucracy around that.
I'm going to have to stop you there again because I could talk to you for hours. But this is our last point. What does the number 24,180,856 mean to you, sir?
Population of Texas.
Pardon?
Population of Texas. You said 20.
In one of your speeches, you said that the Financial Services Committee of Congress reckons that that's how many hours it would take for agencies involved with Dodd-Frank regulation to actually implement it. You have not been a friend of Dodd-Frank. You have your own too-big-to-fail solution that the Dallas Fed just released about 3 weeks ago. This number is pretty big. Just finish off by telling us how ridiculous Dodd-Frank is in your opinion.
Well, I think it's going to be reformed. There's a lot of movement on dealing with containing too big to fail. The problem, which was the premise and the purpose of that legislation, has not been solved. You're seeing, Rick, more discussion about capital ratios from several leaders in the Federal Reserve System, from the FDIC, Tom Honik and others. And also, we have our own proposal for dealing with too big to fail. It is moving forward. You had a bill put forward by Senator Brown, a Democrat, Senator Vitter. You're going to see some action in the lower house. This is a train in motion to correct and simplify how we deal with too big to fail. So, yes, I do think Dodd-Frank went way too far. It's way too complicated. That's the number of hours it would take just to deal with the regulation that have been put forward. And we're not finished yet. We still have to implement a great deal. So I do think there will be action on that front. I expect it to come from the Congress starting intensely after Brown-Vitter. The next step will be in June, and we'll see where it goes from there.
Thank you. They're giving us a bit more time. One other issue I want to dwell on. You talk about specifically the subsidies that go to the top dozen banks at the expense of over 5,500 other banks. That subsidy has been quantified by several wirehouses as somewhere between 70 and 85 billion a year. Do you agree with that?
I don't know what the number is. There are numbers all over the place. We have them from the Bank for International Settlements. The Bank of England has done some good work. Andy Haldane there. The Bloomberg number you just mentioned. There is a study now mandated by, again, Senator Brown, Senator Vitter, to get the GAO to give us a number. All I know is there is a number. It is positive. We, by the way, the 12 Federal Reserve banks are in the process of considering this themselves. We're likely to undertake a study. The Minneapolis Fed, the Dallas Fed, and other Federal Reserve banks to try to wrap our arms around this. But all I can tell you, Rick, is A, it is there, B, it is significant, and C, it's unfair. It's a cost of funding advantage for the big boys.
With the lobbying efforts that these mega banks are putting forth in Washington, do you think it's even remotely possible we can cut through all of that money trying to buy political favor with regard to keeping their mega subsidy, basically the government protecting them? Our own Attorney General Holder has said basically that we can't control these too big to fail banks.
Yeah, that they were too big to jail if they made mistakes. I do think it's possible. It's in the hands of the community bankers. There were 1,000 community bankers in Washington 2 weeks ago working on their congresspeople. This is the unfortunate part of our system, Rick, with these big money pockets. They can buy and sell members of Congress, and we don't want to see that happen. So the issue is what's right, and I think it's in the hands of the community and regional bankers to make it clear. All they want is a level playing field. It's not that you want to break up these banks, these mega banks. You just want a level playing field. You want American competition to go to work. You want to give everybody a chance for success, and those that screw up a chance to fail and close, and that's what this is all about. I do think there will be progress on this front. And if not, I'd be horribly disappointed in our elected officials.
Mr. Richard Fisher, President of the Dallas Federal Reserve Bank, it's been an honor. Thank you for being my guest today.